All right. Hey guys, welcome to Elliott Wave Made Simple. I'm Brad. After 10,000 hours learning Elliott Wave, I'm applying this to silver, gold, crude oil, NASDAQ, a few currency pairs, and now natural gas as well. Anyway, today we're going to take a look at silver through the lens of Elliott Wave. And really, my question is, which pathway is silver going to take? Uh, it can bottom at any time based on the current structure that I'm seeing. There are two potentials remaining. If you watch my previous video, I was talking about three potential pathways. Now there are two because the first pathway was invalidated. So let's go ahead and dive into the chart and take a look. And I want to remind folks, if you're new to watching this video about Elliott Wave, what I want you to remember and focus on are the parameters. In other words, where's the floor? Where's the ceiling? Where do we get the best clues based on what price does? We're talking about parameters, not predictions. So when you see a label on an Elliott Wave chart, the tendency is to think, oh, that's a certainty. And especially if you happen to catch a certain move and somebody is presenting Elliott Wave and it actually follows the pathway, sometimes that creates an unrealistic expectation of, oh, well, it's going to go there now. No. What is great about Elliott Wave is the parameters. So you know where you're wrong. I mean, how effective is any method if you can know where you're wrong? So, for example, I'm about to show you in silver regarding Elliott Wave, because I thought we might be about to catch a smaller degree wave 4, but it went too far. Let me show you what I mean. Here's a chart. Okay, so I know some of you guys are on phones, so try to enlarge this area so you can see the price levels that I'm talking about. Originally, the idea was this blue area would have been the perfect area for a smaller degree wave 4 to hold, and then we get one more shove up for what I was originally looking for as a wave 5 over here. Now, at the moment, I've put that wave 5 over here because of the reaction that we had from there. Now, there are still a couple of options, but really there are two primary options that I'm considering right now. And one is this general area can hold. Okay, so this is a really easy softball type, kind of almost obvious type of parameter right here at the 382 of the entire move. And when I say the entire move, what I'm talking about is from this low down here, 27.22, all the way up to the top here. We have retraced almost to the penny. Let me see if that was to the penny. So that low right there is 29.08. And wouldn't you know, look at that, 29.08. Now that, look, if you're new to Fibonacci or Elliott Wave and you haven't had a lot of experience with fibs, Fibonacci, we call them fibs for short. That's an example of why guys like to use Fibonacci for trading. I mean, my goodness, that thing hit the thing to the penny. I just realized my camera's a little out of focus. So, I mean, price came down and hit that fib, the 382 fib, to the penny. What are the odds of that happening? Well, if you've been doing this long enough, as I have, you're going to see it happen. You're going to see it happen enough that you're going to want to use the magnet tool when you're making your measurements. You want to get them exactly on the lowest price point. If you're looking for a swing low, you want to use a magnet tool and put that thing right on the swing low. Same for any swing high you're measuring. Put the thing right on there so that you can witness some of this magic. We jokingly call them magic fibs sometimes because it is almost like magic. Anyway, so price came down and hit the 382 on the nose. So this is a decent parameter. It is possible. Now, look, it's possible that that's the low. Now, where is this entire move coming down? Well, relative to that last low right here. Now, look, I'm going to turn my magnet on. Relative to this low over here from Thursday the 22nd, almost a week ago, relative to that low, This just has exceeded the 764, and that is very deep. There's no way that's a wave 4. No way that's a wave 4 now, which is part of the reason that I say it invalidated that first potential up here in blue. And then now, so it is possible that this is actually another 1, 2. It's possible that this is another 1, 2. Now, honestly, between me, you, and the lamppost, I don't love that structure. I think what I would like better, honestly, is if this gives a bounce somewhere from down here and it still looks corrective, or maybe a B wave bounce, and then one more shove down for the larger degree wave 2. What I mean by that is this entire structure up off of this low could be a new wave 1. And then if you get a bounce and one more shove down somewhere in the mid to low 28s for proper wave 2, then we'll finally get the wave 3. So this is an interesting spot in silver. And if you've been paying attention to silver long enough, as I have, really since 2009 in earnest, but using Elliott wave, I've been looking at metals, silver, crude oil for 5 years through the lens of Elliott wave. And when the metals start to move, they fly. So it's really hard to get into a position once they really start moving. Look at that, silver's coming down while I'm doing this analysis. So the idea is that somewhere, either it's already caught support right here, or maybe it's in the process of catching support, or maybe it needs to come down and make a newer low. Whatever the case is, it's very unlikely that silver is going to just go directly down to this level. It is much more likely that it is going to bounce at some point. If it does want to come in a more direct fashion lower, yeah, it's going to bounce at some point. It's just so irregular for price to ever move in a direct straight line kind of fashion. I mean, this thing is already possibly 3 down, meaning like an A, possible B wave, possible C wave. It could also be 3 down for an A wave. Kind of, let me show you the idea. 3 down for an A wave, some kind of a B wave bounce, and then a final shove down to the 618, which is 28,375. So $28.37 would, if it wants to come down, if it doesn't catch support here and start giving us a bounce, the lower it comes, the more likely it's going to get down here, even though it's going to bounce at some point. It's a little unclear. Now, you're going to watch me do a little homework. Okay, I know some of you guys are asking me for like a beginner's video and a how-to video, and it's coming. It's in the works. The challenge with Elliott wave, I think probably the hardest thing to do for an Elliott wave beginner is take a chart that has no markings on it and figure out, where do you even start? Where do you even start measuring? Because it's all about measurements. It's all about fibs. Elliott wave is all about Fibonacci. It really is. It's just applying a certain methodology on top of Fibonacci. So most of you guys, especially any sophisticated trader, is going to know something about Fibonacci, and they're going to know about the 618. And if you're sophisticated, you're going to know about the 1.618 as well. Elliott wave is all about the fibs. So the best thing, one of the best ways to learn is to simply look over the shoulder of somebody who is skilled and literally try to emulate what they're doing. So that's how I learned, and I learned from the best in the world at ElliottWaveTrader.net. It's not a cheap place. I spent a lot of money learning this. It's worth every penny. But now what I'm trying to do is condense it and give it to you in digestible manner, smaller pieces, so you don't get overwhelmed. So you're about to watch me do a little homework, okay? And just know that I'm going to be releasing a series of beginner videos. But for now, just try to imitate what I'm doing with my charts. All right, so all I'm going to do right now is I'm going to grab the Fibonacci fib extension tool. I'm in TradingView, and I'm going to use the magnet, even though this is a speculative exercise at the moment. Let's say that the A wave really did bottom already at the 382. And let's say, although it just sure doesn't look like it, it looks like it's just going to come down for sure. It's coming down while I'm talking. It looks like it's in the process of invalidating that, but it doesn't matter. We'll just move the measurement. That's the thing. Price is king. So as price moves, we adjust our thinking. So if wherever this next wave terminates, I'll look for a bounce. And unless it bounces impulsively, I'm going to consider it corrective. Now, this is speculating. You're watching me create an Elliott wave chart, but I'm speculating, okay? Because there is no price wave over here yet. I'm speculating that wherever this bottoms from and it starts bouncing, I'll look for at least the 618, which is reasonable. If you're looking for a B wave, look for it to bounce to at least the 618. Usually it's more like 764 to 886, which is going to be up here more along the lines of this blue line over here, which is already proven to be resistance, this zone. Anyway, so if this gives a B wave bounce up to here, I'm going to adjust the fib. So the typical fibs for a C wave is the 100 fib, the 1236, and the 1382. And now look, this is just me throwing some fibs on here, right? You saw me just do that. And what's interesting to me is I had put this C wave on here as a speculative idea that for a wave two, wave twos are almost always composed of a three wave move, ABC. So first you need the A wave, then you get a B wave bounce that gets all the bulls sucked in. And then not only do you stop out all the bulls, you rip their hearts out. And that's what a C wave does. It's like a C wave is considered the crash-like wave, because whenever there's a C wave, people get freaked out. It's similar to a wave three, actually, overall. And guess what? A C wave has a wave three inside of it. So anyway, now I'm just talking too much. But isn't it interesting that I just threw on the fibs for an ABC move and the C wave? These are two targets that are reasonable for the C wave. And if you do get a B wave bounce and it were to come up into this zone, look at where the C wave would project to, right exactly where I was speculating the C wave. So, does that mean a lot? No, not really. But I'm just teaching here. So wherever this terminates from, like let's say it comes down deeper and gets into here and then starts bouncing. Well, all I'm going to do is move this measurement to wherever the next low is formed, because just because it tagged the 382 to the penny doesn't necessarily mean that that's the low. It certainly is interesting that price can ever tag fibs to the penny, but the idea is you need to see more price action to get more clues. So let's talk parameters. I'm still looking at the $30.03 as a parameter, like in my mind, and I've been thinking this since over here, as indicated by this arrow. If we can get above this level, it's very possible that we're really in the heart of the larger degree third wave. And that's really what all of this attention is about with silver, is we're trying to catch a larger degree wave three. Really, it's the wave three that goes with this, either this wave two. And if this is a wave two, it's still a smaller degree wave two, but that's fine. It's still very bullish. Ironically, if this comes down into this zone and retains the corrective quality to the structure. Now, if you don't know what I just said, if you don't know what the quality of the structure means, you're gonna, if you keep watching this channel, because an impulse is basically composed of 5 waves. Corrective action is basically composed of 3 waves. Are there exceptions to these guidelines? Yes, there are. But at the moment, we are tracking a 3-wave structure in silver, and that tells me it is corrective. Now, this looks like a bit of a triangle here. Could be a B-wave triangle, but in any case, without getting into the weeds of trying to explain too much in a short period of time, would you agree that this looks like 3 waves down into the current low? This is clearly a wave down. Then there's clearly a bunch of chop that tops up here. And then there's clearly what looks like an impulsive move, really lower. And guess what? In a C wave, you are looking for an impulsive move. Now, just to clarify here, impulses can go higher or impulses can go lower. Just because I say impulse doesn't mean it's bullish. You can have bearish impulses. So here, A could be a B wave triangle here. And then it's very possible that this is like a 1, 2, 3, 4. And then now we just finished off the wave 5 of C of A. Now, who knows? It's really interesting that this price is just moving down here while I'm making this video. So for the moment, I'm going to leave these fibs where they are. I like to use yellow fibs to track 3-wave moves. I like to use yellow to track C waves. So, the 100 fib, now these fibs here are based on, see, I don't want to keep talking because it's just going to turn into like a word salad, but I'll just say this. The 100 fib is quite often produces a bounce or can be actually support. So let's see what happens in the overnight session with these levels down here. 29.34. I'm going to move this over to where I think it would, if it's going to get hit, it's not going to get hit. It's not going to go in a straight line. Price almost never moves in a straight line. If it does move in a straight line, you can bet that's either a wave 3. In general, it's going to be some kind of a wave 3 when it's moving in a straight line. That's the most powerful wave. So now that I've confused you with all this stuff, I'm just going to remove some things and go for some parameters. All right, so for right now, this is your first parameter, is 29.08. If that low holds and you start seeing a bounce, I'm going to expect it to get up into this box at a minimum. Okay, if it keeps coming, I'm still going to be looking for a bounce. The question is, where is it going to bounce from? The 100 fib is a perfectly good fib to see price have some kind of a reaction to. Okay, so that's what I would expect. So call it 28.83. All right, so you got 29.08 is the first parameter I'm giving you. The next one down is 28.83. And if that doesn't hold, in my view, it needs to bounce. I think it's unlikely that it comes down directly through all of this and makes it down into here. Could that happen? Of course. Anything can happen. Yes, of course it can happen. Anything can happen. I'm trying to present you with what I think is most likely based on Fibonacci. So if it does come down here, I believe it's going to bounce. And wherever this starts bouncing, there's two things that we're going to consider for any bounce. Now, this is true in any circumstance. With Elliott wave, there are really two things. It's the fibs is one thing, and the structure of price is another. So once you understand the different wave characteristics, for example, corrective waves, as I was just saying, tend to be in threes, ABCs. It can be more complex. There can be a series of 3-wave moves. So it makes things more complicated, but it's still moving in threes. That can be corrective. Impulsive moves move in 5 waves. So that's kind of the top level, most basic thing to understand. Is price moving in threes, or is it building some kind of a 5-wave? Has it already had a 5-wave structure and then it's correcting in threes? That's really what you want to be thinking of, and that provides fantastic clues as to what is happening. If this price is bouncing correctively from this next low, wherever it is struck from, I'm going to be looking at the structure of price to see, does it look impulsive or not? Because if it's bouncing and moving in threes and overlapping, it's going to lend credibility to this being a B wave still. It's going to be corrective, even though it's going higher on the bounce. It could be considered corrective if it's moving in threes. Whereas if it's moving what looks like as an initial 5-wave impulse and then a 3-wave correction, you can start to lean towards, maybe the low is in, and now we were going up either in the heart of this wave 3 from here or a larger degree wave 3 from here. So that's the deal. So again, parameters for now. This 30.035 is important. The 29.08 is important. Just to keep it simple, even though I do acknowledge that 100 fib lines up with the 50 fib almost exactly. I like the 618 area better for potential larger degree wave 2. So if price is going to give us a bounce in the next day or two, correctively, and then fail, I'll be looking for something down in this area right here. Okay, so and if it comes down here and gets below 28.27, I'm not going to like it at all. And what I'm really hoping to do is discern this next bounce, because I'm still holding some longs from much lower level. The next bounce, if I can discern whether it's corrective versus impulsive, I'm going to take off my longs, at least half of them. I was over here, I was saying a similar thing, but I was looking for this to terminate up here, and it did not. But I did not take off my longs because I'm up wildly and have great entries. I'm leaving it alone. I'm being patient, and I'm watching structure. Okay, so tonight, overnight, the market's closed now after 5. So let's see what happens on the open. Let's see what kind of bounce we get. Even if it comes lower, it's going to bounce at some point. Okay, so we're going to track that. Okay, we're going to track the next bounce, and that's going to give me clues as to whether or not I'm going to start peeling off my longs, wildly profitable. At this moment, my silver, that instrument, silver futures, is my largest single gainer of the year, and that's saying something because this is August. So I'm not going to be frivolous with it. I'm being patient, but if I get a bounce that's corrective, I'm going to start peeling off. The challenge with silver, as I was saying, is once it starts really rocking, you're not going to be able to get on the bus because it just resumes, and you're going to have a day with a $3 move in a single day. It's going to happen. I've seen it over and over many times since 2009. Well, really, probably about 4 times have I seen crazy moves like that. All right, so you have your parameters, 30.35 to the upside, 29.08 is immediate parameter. And then if it breaks that level and comes down here, I'm going to look for 28.83, somewhere down here to create a bounce. And I'll measure again to see where from here, I could still consider this an A wave. If it comes down nominally, makes a nominal new low and starts bouncing, that still absolutely qualifies as an A wave, unless it starts coming up impulsively. So then if it does that, we'll see where this terminates. We'll see what the structure looks like. And then we'll decide whether we think it's going to keep going higher, even though this is your parameter right here, 30.35. And if you want to be conservative, you can move that up because, I mean, it's obvious where the last high was. Call it 32.25 as a ceiling of sorts. So that, call this a zone. This is a zone. So the other parameter is 28.275, $28.27. All right, so the 3 main numbers is 30 and 3 cents, 29.08, and 28.27. That's the deal. All right, so let's see what the open does. I'll be surprised by nothing. I do think it's remarkable. I can't believe it tagged it right to the penny, to the 382. That would be so poetic if this is the A wave. All right, but look, it doesn't really matter being right, trying to be right. And a lot of analysts, you want everybody to see how smart you are. You really get emotionally involved in your own counsel. I hope I'm right. I hope I'm right, because then everybody will see how smart I am. Been there, done all that. No, remaining objective, just doing the analysis, letting the Fibonacci talk to me and tell me where the parameters are. And then I've already made my decisions. I can make my decisions in advance based on the parameters. So I'm not going to be emotional about it. I'm going to allow this thing to go against me more, because it's going to bounce at some point. And when it bounces, then I'll make a decision about my overweight silver position. But for right now, I'm still doing nothing, just watching and observing. Okay, so Just know parameters over predictions. Parameters over predictions. Study my charts, learn how to put your tool exactly where I am, get used to measuring stuff. Look, here's a great practice thing. Use your fib tool and just look for 618. Just use your fib tool and just practice. If you're new and you want to get into Elliott Wave, you're halfway understanding what I'm saying, but you're getting lost. It'll make a lot more sense to you once you start imitating my charts and actually put your fib tool right where I have mine and move the tool around and click and see where the 618 is. Get used to that. It's a great practice. Also, 2 silver videos ago, I did a very, very educational approach. I didn't just present the analysis, I was teaching. And I really painstakingly explained exactly how to use these fib tools to come up with the same measurements that I'm doing. It's not rocket science. You can learn this. Once you learn it, you go, oh, yes, it's complicated. Yes, it's not the easiest method to learn, but it's worth the effort. And the more time you put into it, it's all about measuring. So the more time you put into mastering these skills, look, trading is a skill that you can learn. Performing analysis is a skill that you can learn, but it takes practice. Look, I put in my 10,000 hours as a musician years and years ago, and I'm still riding from that, from all the fundamentals that I learned in my first 10,000 hours. Same thing here. I've put in the 10,000 hours in Elliott Wave. So if you've only been, how many hours have you practiced? 2, 5? Oh, wait, you don't want to practice. You just want somebody to show you. Just make money, buy here, sell there. And then you can blame them when it doesn't work. Oh, Elliott Wave sucks. Been there, done that. I didn't want to become an analyst. I used to say, I don't want to be an analyst. Just tell me what it's going to do. And then now, all these years later, I've basically become an analyst. I mean, I'm my own analyst. I don't take a trade that I don't understand. I have become my own analyst. And I suggest that you get very familiar with the fib tools and start practicing. You do an hour, you do 5 hours, you do 10 hours. Once you get to 50 hours, you're going to be amazed where you are. You're going to be amazed how much better you are and how much you understand your own trades and your own self and risk management. Elliott Wave is fantastic. These parameters are helping with risk management because really trading shouldn't even be called trading. It should be called risk management. Okay, now I'm just talking too much. Thanks for watching. If you're getting value out of this, you know what to do. Hit the subscribe button. That'd be great. To encourage me to keep doing this, hit the thumbs up. I really do appreciate all you guys' eyeballs. And I like it when people ask a question or comment. It's beautiful. I will reply. So if you're wondering something about what I've said today or in any other video for that matter, if you got a question, drop it in the comments. I will reply. All right. We'll see what happens tonight and tomorrow. And I'll be doing another video on the weekend, on Sunday. Oh, last thing. So like if you want more data, if you want more price action to trade off on a more regular basis, join the club. You can come into a free area of the club by clicking the link that's in the description of this video. It's called the Traders Lounge. You come in there for free. I'm dropping a chart in there once a day. Armando, our great leader, he is the professor. The professor trades is Armando. He drops a chart or two in there. You may see a video in there for free. You're going to see other members in there posting, sharing stuff. So you can come in and get familiar with us for free in the Traders Lounge. Just click the link below and select Trader Lounge, and the cost is $0 for the Trader Lounge. So come in and get a little more data. But of course, if you really want to get the actionable stuff all day long, you got to be on the inside of the club. It's the same link that's in my description. It's just that's less than $1 a day. You're going to join a club led by Armando. The value, I can't even overstate it. You got to try it. Plus, you can get 7 days for $7 as a trial. But just do it on a week that you really can spend the time focusing and looking in the room, because the value that you're going to see there is amazing for less than $1 a day. Okay, I'm done. That's my plug. Thanks a lot for watching. I appreciate you guys. And remember, in silver, with any futures instrument, the most important thing is don't get killed. All right. Thanks for watching. See ya. Bye-bye.